Hello, everybody. Happy Sunday. Just checking audio. Give me a minute here. All right, looks like we are good on the audio. I hope everybody's having a great Sunday. Not sure if there's a whole lot of people in the live stream, but this video will be recorded anyway. Today we're going to be talking about the technical analysis for the chart symbol stock symbol SENS, Senseonics. We had a nice video last week, talked about some of the daily price action. This week I want to go a little bit in more detail, talk about monthly, weekly, and daily chart technical indicators and where we are in terms of price action. I have a few notes that I'm going to cover today. Hope you find this information useful. Before I start, I want to make sure that you understand this information is being presented as informational and entertainment purpose only, educational purpose as well. It's not investment advice or trading advice. You should not obviously risk any money or listen to anything or make any decisions based on what is presented today unless you consult with your financial advisor. Trading is very risky. You can lose a lot of money. So this is just my personal opinion for what I'm seeing from the chart. Also, I'm not affiliated in any shape, form, or way with the company Senseonics. It's just another company on the stock market that I had interest in the chart. And also, I am a long-term investor. However, I have interest in the chart. So I'm presenting what information that I'm analyzing and sharing it with everybody to make your own decisions. So most of you understand what Senseonics does. They are a manufacturer of embedded continuous glucose monitors. They have been in business since, I believe, 2016. At least they've been on the stock market since 2016. Their current newest product is a EverSense 365 embedded CGM, which is supposed to be embedded under the skin and last about a full year and can continuously monitor glucose levels in the bloodstream. So what I talk about today is really the technical chart. The fundamentals, like I mentioned last time, I don't necessarily deep dive into fundamental analysis. There's a lot of people that know how to do that better than I do. But I just look at charts and try to analyze what the price action is and where we are. So we're going to start with the monthly chart, and I have a few things I want to cover. First things off is the average moving averages, like the price moving averages. So usually the ones that I track are the 5-day, which is in the cyan, the 20-day, which is in the red, and the 200-day, which is, the 200 period average, which is in orange. However, since this is a monthly chart, we haven't had yet 200 months total since the stock came on the market. So the only two moving averages you can see are the 5 and 20. So from a monthly perspective, Senseonics has been definitely in an uptrend. We've already crossed our 5-day and we've crossed our 5 and 20 monthly averages. Last time this occurred was back in 2021, right here. That's when the price actually crossed the 5-period moving average on the monthly chart and the 20 as well. And we had this huge run from early 2021 through mid to late 2022. So that's number one positive for the monthly chart. The second item is the volume. If you look at the average volume, the last 2 months have been way above this yellow average line, and with strong buying momentum. So we've had a total of about 350 million shares traded this month. The month before, somewhere around 300. And we haven't seen this kind of volume since 2021 as well, when we had this huge surge in volume and buying momentum. So that's a very positive on the monthly chart. The buying is real. Is very similar to this run back here in 2021. If you look at the RSI, so this is the RSI indicator, which kind of shows whether something is overbought or oversold. Right now on the monthly chart, we're not really overbought, so that's a good thing. We came out of a huge period of selling, and we fell below kind of the midpoint on the RSI, and we barely started coming back to the midpoint. So December and January, we're hovering around the midpoint, which is healthy. That means there's room to grow on the monthly chart until you hit at least the upper boundary of the RSI. So we're almost at halfway. We could go up or down from here or continue sideways, but from a monthly chart's perspective, the RSI is definitely in a healthy position. The other indicator that I track is this buying and selling momentum indicator. And it's kind of like similar to a MACD, but it's a little bit different. And the green line is really the buying pressure, red is selling pressure, and the orange is the signal. So if you look at the monthly chart, buying momentum is barely starting to move up after a huge period of selling continuation. We had selling above the signal line for all this period. The selling momentum started to drop below the signal line, while the buying momentum is starting to come close to the actual signal line. So from a monthly chart perspective, we still have room for this buying momentum to continue. We just barely moved from the bottom. So there's a lot of room for buying to continue. That's a good positive. Again, the last time this occurred was back in January of 2021. So if you go back right here, that's kind of where the last time we started seeing buying actually stepping up and selling, declining. and the buying took over the actual signal and for a few months, and then we started selling off again. So uh, basically this cycle here is represented on the monthly chart, similar to what we had back in 2021. So this could be the beginning of a longer run up. It could be just a temporary blip. Time will tell, obviously. Monthly charts are just very, very long duration charts, so they require a lot of patience for you to be able to make use of the information. The next thing I want to or a couple last things I want to show on the monthly chart is what I call these selling channels. So from a big perspective, I'm going to hide the monthly moving averages for now and just go look at the consolidation channel. So these pink channels are selling channels over the lifetime of this stock. So most of the selling has occurred through these selling channels, and we hit all-time low here. In the past, we've tested the bottom of this channel, and we start pushing back up. So right now we clear this bottom channel. We have room probably to the 146 area if you just follow these channels before we might see some resistance of the monthly chart. So I would say about the 150, maybe 155, 156 area presents a monthly resistance level that we need to be aware of. There's also a bunch of other control selling, which is slightly less tapered, all these cyan ones. And again, we cleared the one from February 2023, but we're working our way through this next potential resistance level on this channel here, which was in August in 2022. And that again puts you around the 1.55 to 1.6 area. So there's kind of a confluence of two potential resistance areas coming our way on the monthly chart. And if you look at the overall patterns, so when you look at the big chart, you can see there's potentially one of two things. One of them is this huge cup and handle that's been working its way since 2018. So it's kind of a large cup here, and we busted above it, and then we formed kind of this handle. You can think of that as a cup of a handle in the monthly chart, and we're starting to break away from it. That's one way to look at it. You can also potentially look at this larger cup here that potentially is in the process of being formed. That will take a few months before we get there, like 2026 level, before we even hit the higher part again. So depending on your perspective and how you see charts, this might be a longer term forming cup, but time will tell, obviously, if that's the way it is right now. You can also see it as potentially a nested cup and handle. So there might be like this cup here, and then we have another one, and then there's another one here that's kind of forming on the smaller time frame, and it'll show more on the weekly chart. But that's a possibility as well. So just overall patterns I wanted to highlight. There's also a potential W, like a double bottom. So we hit this bottom, we rallied, we took a longer way to come down to this bottom here, and maybe we're starting to rally as well. So this kind of W pattern, should continue potentially up to the all-time high, and then pull back a little bit before finding more buyers and moving forward again. So these are kind of the monthly chart activities or potential technical indicators. The only risk I see on the monthly chart is really the potential for a head and shoulder. So if you look at this head and shoulder pattern, we've had a lot of liquidity build up in this region over 2019 to 2021, and we peaked here around 2021, 2022. You could argue that this might have been another area of the right shoulder, maybe started here, which would be the risk is if we don't break above kind of this level here at the neckline, we could see price fall down back below and continue selling off. So that's a possibility. Just keep in mind it is a risk on the monthly chart, but everything else on the monthly chart really is very positive so far. The last couple of things are major supply zones on the monthly chart. So I'm going to show you here what I mean by that. So right now, these two red zones are the major supply zones. That's where sellers showed up with a lot of liquidity to dump. The first one that's coming upon us is this one from March of 2022. It's around the $2 area. And we've gotten we're about almost $1 away from it, maybe 85 cents away from it. Coast is not obviously clear, but just to be aware that if we are approaching this price level, know that this is a potentially supply zone from back here in 2022. The one thing I want to note is that this supply zone has been violated once. So the possibility of it acting as a very strong resistance is less. That means, we busted through it, but we sold off again. So there's a lot of liquidity that's built here. So that liquidity probably was building momentum to bust through this supply zone. So I wouldn't be surprised if we don't have a lot of resistance in this area and go above it, break it, maybe come down, form this little cup, and then continue higher from there. So that's obviously a possibility. Just be aware that that is a supply zone from a couple years. The other big supply zone is the one that we saw in 2018 right here, and that we still have quite some ways to get there. It's around the midpoint is about 461 area. The range is from 491 to 423. So this is supply zone. We're not going to worry about it yet now because we're not even close there, but just be aware that it exists in the monthly chart. All right, that's all I wanted to cover on the monthly chart. We'll go right now and talk about the weekly chart. So on the weekly chart, let's do this here. A couple of things I want to highlight, similar to kind of the analysis here. We're going to start with our moving averages. Again, this is a period moving averages, so it's the weekly moving averages, not the daily. And again, from a moving average perspective, price did cross above the 5-day moving average and the 20-day moving average. The 5-day crossed above the 20 moving average, and we're both heading our way towards the 200 at 132. So just be aware from a weekly perspective, the 132 area, 135 might offer some resistance because it's not easy to break the 200-day moving average, or sorry, weekly average. We've had volume-wise, let me expand this a little bit. We've had above average volume over the last few weeks. So if you look at the last 6 or 7 weeks, we've had volume continually accumulating here. There's a lot of buying pressure. We only had one pullback week, which was below average, so that's all healthy on the weekly chart. It's surging again to similar back to the 2021 when we had similar weekly above average volume in the 200, 300 million kind of was back here in 2021. So we had a sustained period of above average volume. We're starting to see potentially some of that now. As far as the RSI indicator, we are getting into this red zone of overbought area. So that's something to keep in mind. So we're a bit overbought. We're approaching this red zone, which last time was in 2021, run right here. Although we entered this red zone and actually stayed in there for about 6 weeks. So the possibility of it getting into the red zone and continuing is still there. If you go back in 2021 and notice how we actually broke through that zone, we actually had a lot of still buying pressure, although we were kind of overbought on the RSI. So it could happen. It's less probable, but very possible that we potentially, if the momentum is still strong, we would bust through the zone and continue, maybe hang around for maybe 4 to 6 weeks before we start seeing any major sell-off. All the resistances above us, like the 200-week moving average, might be in the way, plus a bunch of other zones I'm going to show right now. As far as the buying and selling oscillator, similar to what I showed on the monthly chart, on the weekly chart, it's actually a little bit more pronounced. We picked up momentum back here in December on the weekly buying momentum. We crossed the selling, so buying, buyers are definitely in more control, and we just barely crossed the signal line. So that's a good indication that this move is real. It's not a fake out. And we'll tell obviously if we continue to rise or maybe start to hover around the signal line. Just be aware that on the weekly chart we are showing a lot of strength, but we're close to being overbought. So just keep that in mind. I'm going to highlight these selling channels again, just to kind of show them on a weekly chart. So the pink and the cyan selling channels, We have a confluence of them coming up here around the 152 area, 152, 157. A couple weeks from now, if we were here, that's probably going to be an area of resistance plus the 200 weekly average. So, over this area here, we're going to have some battle to fight here. And let's see what else we have. Like I talked on the monthly channel or a monthly chart, there's potentially this miniature cup and handle that's in the process of forming. It will end somewhere around the 235 rate area. If we break above it and then pull back a little bit, that's a potentially, bullish signal. So that's something to keep in mind. We have also a risk. So the risk is we could potentially be forming a head and shoulders pattern as well, which is highlighted here. So it's a little bit on the monthly chart. We talked about that before, but this is more pronounced on the weekly chart. So you have an area of which could be the head here. You have a lot of liquidity being built here as a right shoulder. This could potentially all be right shoulder of a liquidity build before potentially a sell-off. So that's always that possibility. You'll know if you break the support here, or if we break this, or if we can't break above the neckline, or break above it and then retrace down below. So just be aware of that. And then if you go to the weekly supply zone, so I'm going to show these here right now to be aware of them. So right now we have a weekly supply zone from August 2022. We are right now at this critical supply zone from February 2023. We seem to have broken through it. However, we've stopped right at the upper boundary. So I'm zooming here just to show you. This zone is from 2023. And on Friday's session, we peaked above it, but that came back and closed right at the boundary. So that could be potentially a signal, early signal that there might be a cool-off period or a pullback. This zone, there's a lot of supply there. This came like what's right here in this region here. So just be aware of it. If we start selling off on Monday, that means this area is still offering a lot of resistance and we won't have a chance to test the 200 yet before some sort of pullback. The good to know is the demand zones from before, from December and last year. These are the two big demand zones. It's unlikely the price will break through them unless something fundamentally has changed. There is a possibility always that we come back and test it. So that might be a good opportunity to add up or add more shares if you are a long-term holder for it. But just be aware that if you break below these, then something is wrong. I think that covered everything on the weekly chart that I wanted to talk about. So let me hide these and move on to our daily talk analysis here. So as far as the daily chart, that's where we see more of the action, recent action. And I'm going to show the moving averages for the daily chart, which I talked about last week. And again, price is actually above all the 5-day moving average, the 20-day moving average, and the 200-day moving average. We had a healthy crossover, the 20 above the 200, obviously, and the 5 above the 20. So all pointing to a positive uptrend. That's good. The other item, and again, this hasn't happened since back in 2021, like when we had really a crossover, the 20 to 200. So that's all good. As far as volume, our daily volume candles, we've had a few very big above average volume, especially on January 10th. And since then, we've had 3 days above volume in addition to that one, so 4 total. And then all the pullbacks have happened on below average volume, except for here on January 17th, where some sellers started showing up. So just be aware of that. The HARSI, which is our RSI indicator, is more pronounced compared to the weekly. We are entering this red zone again, which is a signal for overbought condition, which can be a short-term resistance and offer us time to either cool off or maybe do a small little correction to bring the RSI a little bit down. As far as the buying and selling momentum, obviously clear buying momentum started here back in December 11th. We crossed the selling momentum, we crossed the signal, and we are accelerating on the buying side. Now, is this sustainable? Again, it has happened before. We've had periods where we had a lot of buying pressure come in back here. We've had right here, maybe there's this period between 2022 from July through August that was short-lived, but it was very, very strong. You can see on the price here, we had a big move at that time. Sorry, I'm just showing you right here. Also back obviously in 2021, I have to go back all the way here to show you that huge explosive move when we crossed buying momentum, crossed above the signal and stayed above the signal for quite some time. So this was from December 2020 through March of 2021. So it is possible for this to continue to go higher. Like if you look on where we are right now, we're not even close from the magnitude perspective of where we were. So, you know, there's still room to grow, but we are showing signs of being overbought here. So just keep that in mind. The other thing is back here, I'm sorry, we did cross the red zone a couple of times and hang around for a few days, but that's just not the normal. So don't hope that we'll have just an unlimited growth without some pullback coming up very soon. And then we have the controlled algos. So let me show those again here. Those are again, we talked about on the weekly chart, we're coming to an area where we might have some selling pressure coming up here. So that's around the 150 area, 155 area. Just keep that in mind. And then we have also our daily trend lines. So this is a little bit where it gets busy. I showed these channels from last week. We have primarily this green buying algo that's starting to show up. We broke above it on Friday. So it's either we continue through this more steep green channel, or we correct, come back on the blue and the yellow to build some more liquidity before we move higher. So right now this is definitely bullish, but it could be on a short term, the beginning of a formation of a little mini head here. We built liquidity on this shoulder, so there might be some shoulder here. Takes us down, potentially test this region, or even takes us down further if the buying is not sustained or it's a fake out. So keep that in mind. And we do have potentially a forming cup and handle that I showed before, so I'm not going to show that again. And looking at the major supply zones, so let me hide the trend lines, show you the daily supply zones. So we had quite a few coming our way. We just busted through these, which is a good, healthy sign. The next one is really from October 2022. That's around the 135 area. So that's potentially maybe a short term, and it kind of is very close to the 200 weekly moving average that we showed around 132. So that's a possible area where we might find some sellers and hold off for we then correct a little bit. We do have some opportunity to go from here to about 130s, maybe 150s if we're lucky. But I anticipate us going beyond that without some serious correction coming our way. The last thing I want to cover is the anchored VWAPs. So I'm going to show them all. First of all, the ones that were above us last week that we broke through it. So all these green lines are anchored VWAPs from prior key dates, and we seem to have been able to overcome them. So most people that are average buyers in this area here and this area here are now in the positive. And you can see some of the comments on StockWits where people are saying, yeah, I'm barely now at my entry point or my average entry. So that's kind of what they're talking about. So that's good. That's all this is good. We busted through these. That's good. All these levels here were prior anchor VWAPs, which we crossed above. That's fantastic. The ones that are still remaining are all these magenta ones. So we've got one at 130, 149, 172, 181, 225. And all of these come from older time periods. So these are some of them, again, around this 2022 period, 2021, 2022. And some of them are from the 21 to 21, sorry, the 2021 kind of rally. The all-time high anchored VWAP, which is right here, is this line here. That sits around, I believe it's the topmost one here, which is right now sitting at $2.25. So everybody who bought at the all-time high, the average volume since that anchor point is around 225. So that's going to be, our biggest hurdle eventually, but we still have a lot of hurdles along the way. And I just want to highlight that there. I'll show them on the daily chart that I post on StockTwits so that you're aware of them. But we still have quite a few, let's say, long-term holders that are struggling and want to get out at these different points. Now below us, since we've had kind of a turn, we have some anchored VWAPs from below, and these are kind of potentially support zones if we have corrections coming up our way. So we've got the anchored VWAP from this low here from December 6th, sitting at around 62 cents. There's an anchored VWAP from this low here at January 8th, that's sitting around 77 to 79 area. And then our last anchored VWAP from January 15th is around 90 cents. So these are all important to know. In addition to, like I showed, the zones, so the daily zones here should be where sellers should show up. So could just, if the price decides to correct and we break through these zones again, then I expect to find some support around these average VWAPs, and worst case will be around this level here. Hopefully don't get there. The nice thing is our moving averages are moving up, and that's a good thing. I want the 20-day to sort of come closer to the $1 mark, because if it does, then that means any correction to test the 20-day at least puts us within the $1 or higher area, which is something that we want. We don't want it to correct to 20, anything below, 80 cents. I think that would be too much of a pullback, but everything is possible. Anything is possible. Just giving you the information so you can make more informed decisions. And with that, that's all I had that I wanted to share. I hope this information is useful. I'll continue to post updates as I see. I gave you a lot of the potential areas of where support or resistance are. If you have any questions, shoot them in the comments. If you like this video and you find it informative, please like it. And I will catch up with everybody on StockTwits. Have a great rest of Sunday. Take care, everybody.